Hello, well, it's been a relatively calm day on world markets today, stock markets up across the world. We have a lot of excitement to look forward to before the week is out, but I'd like to concentrate today on the high-yield bond market. It's generally performed very well post-crisis, but it's been underperforming of late. As you can see here, we're showing you the performance of the most popular high-yield bond ETF compared to the S&P. That underperformance is largely because of the falling oil price. There's a lot of small oil companies that are borrowing using the high-yield bond market. There are concerns, therefore, for their creditworthiness. I have a contrarian viewpoint on this, however, from the CIO of Wealth Management at UBS, Mark Haefele.
High yield, it's off about 4% recently, but it's still up 4.5%, but it's still up about 4% for the year. So it's worked out reasonably well. We think that there's still going to be spread compression going forward. We think a lot of investors have been spooked around the relatively small proportion of high yield that is in oil and gas, and because about 40% of that oil and gas exposure is in the gas, which has done reasonably well. We think that overall the high yield is going to do well despite the oil and gas exposure.
So there might be an interesting contrarian opportunity coming up in high-yield bonds. Beyond that, in the very immediate future, we have the autumn statements to look forward to in the UK, always an interesting economic development. We also have a meeting of the Central Bank of Brazil, which many people think is going to lead to a rate rise. And then later in the week, we have, of course, the ECB, where many people now seem to be hoping that we will be getting QE right away this month, which I still think is rather unlikely. And then at the end of the week, we have unemployment data from the US. There's a lot of activity for the rest of this week.